I'd like to call the Finance Personnel Committee for Tuesday, July 17, 2018 to order. Roll call, please.
Mark Williams.
Here.
Chris Herbal.
Here.
John Duska.
Present.
Tom Selk.
Here.
And Mike Milczewski.
Here.
Please stand for pledge. I
Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Okay, action on the agenda. Any additions or corrections?
None that I have.
Need a motion?
So moved.
Second. Motion and a second. All those in favor, please say aye.
Aye.
Opposed? Motion passes. Number 5, action on the minutes of the Finance and Personnel Committee regular meeting, February 20th. We have a motion?
Move to approve the minutes.
Should that be February? Yes, that would be February. Sure enough, okay. I'll second.
Got a motion and a second?
Can't. He was excused.
Pardon?
Tom cannot. He was
Yeah,
excused.
okay. We
It's not
have,
really a rule,
I'll second it.
so you don't have
I'll second it.
to- Okay.
Got a motion and a second. Any other discussion? All those in favor, please say aye.
Aye.
Opposed? Motion passes. Comments from the public? There's nobody here this evening, so I'm going to just skip over that. Action items, number 1, 2017 financial review. Greg?
So now that the audit is complete, I wanted to just go through kind of how the year ended. We had a meeting in December where we had talked about what our ending fund balance was likely to be and how we would allocate the excess funds. And basically, we came in right at roughly where we thought we would. We have a change in fund balance of $2.3 million to the positive. And the majority of that's related to the Klipstein remediation settlement and subsequent reimbursement from the school district related to those projects. And then we had $140,000 from the funds that were lost through that fraud back in 2016. Investigator Messer worked really hard, and we were able to get $140,000 back from that. So that led the charge. I've listed out some other areas. Room tax is one point where we had $60,000 of additional room tax dollars. I think that's testament to the Kohler opening up and some other facilities. We also had a January playoff game, I believe, that helped as well. Ambulance revenues were up. That's another thing of note. We did raise rates, and so we haven't lost call volume either there. So that's a significant change. Other things, there's not a lot of surprises there. The pool, we expected that, not really knowing how that would all shape and form with the first year going in. So that actually was down a net of about $49,000. The salaries, we had some attrition in public safety specifically where we budget full staff and they just didn't have the people, so that's almost $100,000 in savings. And then we forgave the December premiums for health insurance because we had a good year, and that saved the village $229,000. Other utility related items as well. So all in all, that's kind of where we came in on the year. We had assigned, those will be the next agenda item, is talking about where we are updating so that full amount was put into kind of a separate area on the books to say, hey, this is going to be used for future capital project needs. Some of the other things to note as I scroll through some of the financials here, I know there's a lot there. One thing, when you look at the financials on page 26 it's packet page number 7, excuse me. Under the fund balance, we have non-spendable, restricted, committed, unassigned. When we look at our fund balance, we want to make sure that we've got the unassigned portion that is equal to, our policy says that needs to be equal to 20% of the next year's budgeted expenditures, which is roughly $15 million. We are sitting at 34%, so it's very healthy, and that does not include the $2.3 million that we talked about. So it's a very healthy fund balance. It's a nice, the rating agencies love to see that number there. That helps us a lot, and it helps us keep our AA1 rating that we have. there. So that was one note. Some of these other financials, it's just to help give you a picture of where some of our spend is for your review. And I'm just going to go through here on some of the areas that I talked about. You can see the financials, the pluses and minuses. It's more for you. Instead of me giving you the whole CAFR, which is available on the internet or on our internet site for anybody in the public to see, this was just some of the highlights where you can see the general fund information. If you go down to, I wanted also to show you the health insurance, which is on page, let me get there, excuse me. Put a lot of financials in there. And keep going to, on the page 30, packet page 36, our dental and health funds on that page, and then also on page 37, between those two, you can see we had the health fund actually grew in balance, $68,000, which is even with the forgiveness of December premiums. So we had a really good year.
Where is that number?
On page 37 of the packet, it's the self-funded health column, the net operating income of $67,990. That was, I think we've, over the years, have tried to continue to improve that plan. We've raised premiums and other things. I think we found a good balance. We're getting more people participating in the HSA plan, and also utilizing the on-site clinic, which is helping a lot, I think. So we're starting to see some results of some of all those actions. The equipment replacement fund has a balance of $3.8 million. Of that, 2.3 million of that is tied into our existing capital assets, and 1.5 million is unrestricted. That's a very nice number to have. That is similar to like a fund balance to carry. If
Where can I find that number?
that's on page 36 of the packet, under equipment replacement column, under the net position section. So the unrestricted tells us that's money available for any use within, for equipment replacement. What we like to have is a coverage. If we have to do a call up on the highway with a fire truck and someone plows through it, we could pay cash for a fire truck. I mean, it's one of those, we have not bonded for vehicles. That's not what we do, and it's because we have a very healthy fund balance. So when we have years where we weren't really planning for a new loader or a new truck and things, we can absorb some of that, we can absorb that cost. So it's a good, healthy fund balance. The auditors like to see that.
Is
And
that included in that $5 million?
No, this is a separate fund altogether. It's not in that $5 million. This is its own fund, dollars kept separately. So the way that fund works is you have, we buy a vehicle through this fund with cash, and then we charge back the departments off the general fund on a depreciation schedule. So if it's a 10-year depreciation, they get a tenth of the cost every year. So it's healthy. Another number that the auditors, or excuse me, the rating agencies like to see, because they like to hear that we don't bond for vehicle purchases and things like that. That's another big win for the village. So overall, I just wanted to go through, those are the numbers. I don't know if you have any questions or concerns from that.
You've got a fund balance of close to 7.8 million, right?
Correct.
Is there a formula that tells you that, based on the village's expenditures on an annual basis, you should have this percentage in a fund balance?
Right, the standard is 20%. That's what auditors and, your rating agencies like to see as a minimum, 20%, and that's what our policy states. So that's what it's saying. Take out the 2.3 million of excess, because we've already committed that for a different purpose.
Okay.
So the 20%, we have roughly 34% of uncommitted fund balance, which is very favorable for.
Well, do you ever reach a point of being too favorable? And I guess what I'm getting at is if 20 is the ideal, that isn't there a point where your fund balance is too high, and that maybe should result in a lower tax rate?
Since I've been here for 11 years, we've been at least 30%, never more than 35. So
Okay.
we budget zero growth, and typically what we've done when we're going to have excess funds at the end of the year, like this year, we don't add it to the existing fund balance. Unless for some reason we just haven't had really terrible years where we've had to dip into the fund balance.
Okay.
Let's say we need to buy salt, and like one year when propane cost was super high, let's say
Sure.
we were really dependent on propane and we would have had a huge deficit there. That's what that would be used for, and you can explain. So when we budget zero growth, and then we look at the end of the year and say, hey, we're gonna anticipate, in this particular case, we have 2.3 million. Normally it's 100, 150 in a decent year. We allocate that for some other future capital projects, a lot of times trying to avoid having to bond or tax for something. So, hey, we wanted to buy something, we cut it out of the budget, and we'll use excess funds to pay for it instead of having to raise taxes to buy that
Okay.
piece in the garage or somewhere else, something like that. Yeah, it's been a very flat number, the 30 to 35.
So we try to commit the excess, but you don't want to draw out of that fund, even if when it's built up, they would perceive that as you're not budgeting appropriately because you had to dip into your rainy day fund as well. So hence why we try to guesstimate where that number is and then try to reallocate it into the next year so it doesn't go into that $5.2 million number.
No, but you don't want to end up with a 50% number either.
Correct. That's why we're trying to allocate each year's excess, but we also don't want to go back and call in there and say, well, let's take $1 million out of it. They wouldn't perceive that well. So it's really about trying to control it from getting bigger at this point, as opposed to trying to dip out of it, could be perceived negatively.
Are we in a position to budget, if you will, for some of these other things to get closer? Like pool expenditures and stuff like that, or you're not, that's a bad one, but salaries or something like that, so we don't have these big fluctuations?
Keep in mind, this year's really large. I mean, 1.4 million is from the remediation
understand
settlement. So normally, we're not that far off.
Even if it's a couple
And then-
$100,000 or $100,000, I mean, every year that the benefits or wages and everything seem to be, unused wages or whatever seem to be high.
Yeah, we've talked about that, building in an attrition line, because we do budget at 100% staff, and typically, I'll say public safety typically has something happen where there's one person, two people out 3-6 months, but someone leaves or whatever, they don't just hire the next day. There's a process. I think that should be a little bit quicker going forward. They have a little, but
Sometimes we've done it where we've delayed it out by
Right.
like 3 months or said, you can't hire until this point. But I think some of the bigger fluctuations seems to come, like now this past year, gas hasn't fluctuated that much, but in some years, that's a huge fluctuation. Or the numbers you're getting from WPS in terms of electricity and that, heat gas. They keep saying there's an increase, and I think this past year, we said, well, forget it. We already have increased that number too high because we've gone with what their estimates are, so we're just going to leave that. We left it
Right.
the same this year because even though they told us it was going to be 5%, we know last year they said it was 5% and it wasn't that, and so it's already too high. So
Right.
some of it's trying to trust some of the other numbers you're getting, because that's where, you had a good chunk in terms of the electricity and gas. But if you had a huge spike in.
If you take away the 1.4, the 400,000 from the reimbursement from the school, and the fraud funds that came back, so that's 1.95, and then add in the December forgiveness for the health insurance, that pretty much is the majority of it, right? Vast majority. Then you're down to roughly 100,000 or so, and it's a good problem to have. Like I said, then we try to, all of those things, we look at all these numbers and anticipate, because you don't want to be the other way around. You don't want to say, well, we always have this, and then all of a sudden you don't, and we have a budget shortfall.
But didn't we know about the $400,000 payment from the school
Did
district?
not know about that at the time of budget.
We didn't?
I didn't know, no.
We had some miscommunication in terms of we were borrowing for it versus, and then they reimbursed us for it. So
Okay.
I think we
Yeah.
bonded the entire amount and then they're repaying it, and there's just some confusion in terms of, and then we also, I think our bid was actually a little bit under budget. So It was a
Okay.
little bit of a moving target, because when we initially bonded, we also included in there the closure activities, which actually are still actually going on. So those numbers have crept up.
Okay.
And the room tax thing is another thing that's an odd, we're just siphoning off a portion of it. That's not actual room tax dollars. Traditionally, our room tax dollars, were 37% of the all room tax collected within the Brown County area. We're seeing for the first time, we've now flipped, and now we're actually collecting more than Green Bay, and it's a volatile situation. It just seems right now in terms of, we added Lodge Kohler, which has a higher rate, more rooms. Now we have Home 2 Suites on, but then you take half the year, the Ramada Inn that's now converting to a Delta has been offline for 6 months, and we had the O'Connell Lodge had some construction problems, so their roof collapsed. So you have this up and down, kind of hard to predict. Traditionally, I think that's not been a source where we would necessarily see that on this line. But we've kind of had some anomalies happen in the last year or so. And we'll have another anomaly. We have a couple more hotels potentially coming online in another year or so. So it kind of depends on when they open up and how successful everybody is. We've had a lot of growth. We didn't have a great year because there was not a playoff game in January, but preliminary numbers show, it was up 12, 13% in March, April. We did well with WIA, girls basketball, things like that.
And to your point, John, is we have, you can budget to dip into your fund balance. You just have to be really careful. So that if that was something we ever wanted to do to either hold our tax rate flat or drop it a hair a little bit, it would be a discussion I would want to have with my auditors. I'd want to have it with our financial people, that understand how the rating agencies would view that. It wouldn't matter that you were at 50% and wanted to go to 45. They'd view it as, oh, you had to dip in your fund balance.
Well,
and that you just have to be very cautious of how you would handle that.
present company being not included in this comment, there's a tendency in government when you have surplus to spend. And that's why if that surplus gets too big, well, hell, we got this money, let's do it. Now, I know, as I say, present company would never do that, but
Right.
that's a watch out you have to be careful.
And I think it's an easier sell if it's a project that's a once in a generation type project where you can prove that, hey,
Yeah.
we've never done this is going to be a one-time item. That's what I mean, where you'd want to talk to identify how would you communicate this, because that's the first question they're going to ask is, oh, I noticed you dipped in your fund balance and you didn't budget, they're going to want to know every detail around why you did that, because to the investors, they're going to view it as, is this community struggling now? Are they dealing with, bankruptcy issues? And we'd want to make sure that all our ducks are in a row.
I think I asked that before, but prepaying debt is not a possibility.
Debt becomes callable on a 10-year issue. Usually the last 2 years are callable. That's typical. Right.
Okay.
But we've got enough debt there that's each year there's portions of some debt that's callable,
Okay.
essentially. So that was just an update only on that.
Okay. Anybody else have anything on this right now?
Just a couple of quick questions. The cable franchise fee, is that based on the number of households, or is it just a flat fee, or how is that?
Basically based on subscriptions, so how many people have on the Spectrum now and have ATT Uverse, and we just get a share of that revenue source. So if they're receiving less revenue, we receive less revenue. It's not that we're getting a lower percentage, it's based off of their revenues. It's kind of like a shared aid from the state. If we have bad year in the state, then all the communities are going to get less shared aid. So.
We've been pretty fortunate in that our number has not decreased significantly. Alloys has decreased, I can't remember what he said, it was double digits, like 20, 30% over the last couple of years. I think in part ours is sustaining because there's probably so many commercial businesses with cable that still maintain it and that aren't going towards streaming. So if you are a Roku user, Apple TV user, you're not hooked up to a service, therefore there's no franchise fee coming in. So that's why that is going, generally speaking, a downward trend overall.
Yeah, I'm thinking it's a downward trend, definitely.
Yeah.
Another question on the, it says transit system, and it's $100,000 positive here. It's on page 12.
Right.
What is that? I
So
mean,
transit is the bus service through the village that is contracted through the city of Green Bay. And they do an annual audit, typically in around, they finish that up late May, June. And then they look at their cost structure once they finish their financials. And then they go back and see what they charged all the communities, and then they adjust that accordingly. So,
Kind of like a rebate, really,
refund,
because they
rebate.
get certain, they don't necessarily know how many federal dollars they are getting when they do their budget. And so once they clean off their system, if you will, or finalize their budget and report in, they get federal dollars back. And the base calculation in terms of how we get transit, some of it's based on miles, some of it is based on, I think, population. There's two different calculations in terms of what our total rate is. So they just send us that invoice. We anticipate what's coming back in terms of a credit, but it changes.
yeah, the
It's
last
really-
3 years, it was a $20,000 rebate, a $95,000 rebate, and a $60,000 rebate. So,
pick one.
I mean, which one do you want me to,
Yeah.
you know, it's, I don't want to anticipate a $50,000 rebate and only get 10. So it's a challenge.
Do they report the ridership?
They usually have done a update to the village board on an annual basis. I don't think they've, usually that's in August. I'm trying to think if they've been here lately, but
Because my recollection is, it's been a number of years since we got that number, and we were paying approximately $15 a ride.
I, off the top of my head, do not know.
I mean, it was an
Calculation.
astounding figure.
I just get I don't even know if we get a check anymore. I might just get an ACH deposit from them. Don't get much detail, but we could get that, I'm
Have them
sure.
come and do it.
Could have them come.
Well, I think we should know, I think the public should know what that is per ride.
They do a ridership report to the Brown County Planning Commission yearly.
Okay, but does that cover the county or the village? Is there a figure for the village in there?
Well, it's been a year since I've looked at one, but I think it's broken down.
We can certainly ask them to do it. Like I
Yeah.
said, they usually come in August and want to do that, so we can certainly ask them to make a presentation. They've changed in the last, probably I'd say 5 years ago in terms of how they did some of the connections. Like previously, it was more of a, they call it a hub and a spoke program, so everything all happened at the hub at University Avenue. And now they have some sub-hubs, and that's happening on Oneida Street. You'll see out in front of the mall, there's a ton of people there. So
Sure.
there's a lot more, I think before, if you were out at St. Norbert's, you'd have to go to St. Norbert's, over to downtown, and then back to the mall. And now they can go back and forth between there. So I don't know if you'll think that's a good thing for our, our system or not. There's probably increased ridership within our system, but also it's in part because we're kind of a mini hub, if you will. So I don't know what that means to the numbers, but I'm just saying it might not be an apple to whatever
Yeah.
apple you're comparing to previously.
So we can get those numbers back from transit if we want, or, you know,
Yep, we
in
can
a
have them
future
come.
meeting
I'm
or
sure Patty
something.
would be happy to come.
Okay. Anything else? Okay, we'll move on to number 2, update on 2017 excess general fund dollars, what we were just talking about.
Yeah, so briefly, on December 19th, the board took action, and they made a recommendation to assign all the excess funds for future use, but they also made motions to transfer $250,000 to the general building fund and transfer $240,000, to the employee retirement fund, and the rest to be used for capital needs. So the update here is, so we have the 2331811 is the final excess. We take away 250 and 240, and then on February 27th, the board approved using $1 million towards the Mike McCarthy project, the road project. And so we would then essentially have $841,811 remaining. Just to give you an update, we agreed at the time that any dollar spent would go through the board for final approval. But that's just the updated balance, so you're aware of that. There was at one point talk of using, $650,000 towards a parking lot reconstruction that would have gotten paid back over 3 years. That is not on the table anymore at this point, so,
Dead for the moment, but
right.
could be resurrected at any moment.
So,
Okay. Any other questions on this? Any questions, I should say? Okay, we'll move on to number 3, investment report.
so I realized after I'd finished this up that we did do an investment report for the end of the year back in February, but I did have some 2017 numbers on here. 2018 there really isn't much change here. It's a kind of a constant, very slow growth over time, which is what was how it was communicated to me when we pushed some of these funds over to Associated Investment Trust. Nothing has changed as far as the investments are concerned. It's mostly investments in other municipal bonds and similar to when we go and issue our debt. It's a plus. CD rates honestly are starting to come back around, and I'm almost tempted to start looking at alternatives because I can get, if I put something on, and they've changed, the statutes have changed as far as investment terms within the state. So we could go out and put money into a 3 or 5 year CD and probably earn 1.5%, 2%, which would far exceed this. So I was going to sit down and talk with the treasurer and see how he'd feel about that and start looking around. I think that now that some of those rules have changed and you can do that, and the rates on CDs have typically come around, they're still very secure. We could spread them out. There's a lot of different options you can do, but this hasn't changed since I started doing this back in 2012, I believe. It's just a slow, steady growth. There's a lot of moving parts within this investment portfolio. Very safe, so very conservative. So you're not going to get massive yields. It's just not going to happen. But it was better at the time than the LGIP, which was paying out 10 basis points. LGIP is only still paying about 15 or 20, so it's not like it's a better option.
Okay. Any questions? It's update only. Move on to number 4, financial policies update.
Again, annually, I updated the policies that I would update the policies, and so they're here. There are no changes. There's no need to change them. Auditors review these every year. They just see no need, and for the life of me, I couldn't remember your question, so I don't know the answer to that question. I'm hoping you don't ask me again. It's all happened. Some of these are just literally copy from state statutes, and that's typical for the communities. It's because especially the investment policy, you're really controlled by what the state allows, and that's safe and secure. That's the best option.
You need a motion on this to accept these or to approve them?
Yeah, just to accept them would be fine.
So moved.
It's your,
We have a motion. Do we have a second?
I'll second it.
Okay. Any other discussion?
I have one question. It's your responsibility to follow these policies, correct?
Correct.
It's in part of your job description.
Correct.
Okay.
The auditors are like, if you have a policy, you need to follow it. If you don't like the policy, if it's not required, these are all recommended by the WGFO or the GFOA, the Government Finance Officers Association, the national. They recommend that you have these policies in place. Again, rating agencies are the key that really like to see these in your investors. If we didn't have them, I don't know what impact it would really have, but they're boilerplate. They're very consistent across the board.
Okay. We have a motion and a second. Any other discussion?
Nope.
All those in favor, please say aye.
Aye.
Opposed? Motion passes. Move on to number 5, budget timeline.
This is the proposed budget timeline. It is exactly the same as last year, but off just one day. Just the days of the week are the same. I did not check, and I apologize if that's an election day for the budget review. I can bring that back. There is election, but it would be still the same. It wouldn't be this might be the first Tuesday versus last year would have been the 7th, which would have been the second Tuesday. So what is election day?
It's the first Tuesday.
So this is,
Is that the actual, is there an election? That's why I was
I'm-
confused.
there's some sort of election this year, isn't there?
We have 2, we have one in August and one, I think, in November.
Yeah,
Yeah.
It'll be in November.
you got a primary in August.
So So this would be
Congressional.
that number 7 line, which would be the major budget meeting, would fall on an election day. I don't know if that creates a problem. It's not a governor election day, it's
Just that
It's
the-
congressional.
This room is
congressional,
full.
yeah.
Yeah.
This room's
Yeah.
full.
Statewide,
Okay.
yep.
So maybe make that the 13th. That would be the following week.
That's
or-
fine. The 13th would be
And
fine.
then we could go the 27th for the
Mhm.
village board.
Yes.
Okay.
Are you, did you look where August 22nd falls? Because for some reason, I think that might be a Saturday.
So
It's a
Wednesday,
Wednesday.
September
It's a-
22nd is a Saturday, though.
Yeah. Yeah, August 22nd.
August 22nd is a Wednesday.
Is it Wednesday?
Yep.
Okay.
And that's just the meeting I have with staff, too.
Okay.
Their favorite day of the year. And I apologize, I didn't realize 9, 10, and 11, those dates. 10 and 11 would be November 27th, the Tuesday. It's a typo there.
So do we have to prove this?
I don't
You
think
don't
so.
have
We're
to.
just letting
It's
you
update
know
only.
what it
Okay.
is to kind of plan accordingly.
Okay. We'll move on to 6, annual distribution of public officials and employees code of ethics. Everybody's got a copy of them. Just read them, follow them, all that kind of good stuff.
I read it on my phone, the schedule.
And items for next agenda. If you got anything, please see us,
Yeah.
call staff, we'll get it on there. And I need a motion to adjourn.
So moved.
Second?
All's in favor, please say aye.
All right.
Aye.
Thanks.